The third DTC site of this year ended Friday with a slight increase in demand for De Beers goods reported by site holders. That's following similar reports of diamantaires looking to buy more rough in March as select shortages have emerged. The DTC site had an estimated value of $200 million, which was about double the average achieved by DTC in the past 3 sites. Of course, it was still 1/3 the estimated value of the March site 1 year ago. Site holders reported better demand across the board and particularly strong interest in rough that yields polished stones of 1 to 1.5 carats. In the second segment of Jeff Miller's series on the economic outlook for the U.S., he spoke with Michael Niemira, Chief Economist of International Council of Shopping Centers, for the group's take on conditions for 2009.
Describe the retail landscape for us right now. What's really going on in the market?
Well, it's a tough retail environment, and it's one that has seen a lot of transition over the last year. Or 2, actually. If you go back in the say 2 or 3 years ago when the industry was doing very well, luxury market was really leading the strength. All of a sudden, though, last year things changed dramatically. Some of the change first was because of the high gasoline prices that ultimately started to cut into discretionary spending power. Then it was that the economy started to slow, and actually that slowing really began in housing and began in 2006, and certainly escalated since then. So change was really the backdrop of retail spending, and you saw the retailers' performance start to weaken. Luxury sort of held up pretty much through the summer of last year, and then started to get very choppy, and then their performance turned exceedingly weak. In fact, right now, they're the weakest segment on the horizon. So we've seen a lot of change. We've seen consumers shift towards more essential spending. In fact, last year, consumer spending that was at least broadly defined as essential hit a record high in a history that goes back monthly, at least to the end of the 1950s. So there was a very abrupt change in the composition of what consumers were spending on, and we're now still in that process, and hopefully as this year progresses, we'll see a more normal kind of underlying spending pattern ultimately develop. We're not there right now, however.
Now, what was your all take on whether diamond jewelry will be on those shopping lists this year?
Well, we're still kind of in the mindset that luxury is not where your dollars are going. We have a report from New York Times survey that suggests that 40% of consumers are cutting back on luxury spending right now. And that certainly, I think, has been we've seen that kind of pattern in even high-end retailers that are struggling now. Now, I am of the opinion, however, that once the financial crisis starts to moderate and the financial industry starts to show some improvement along with the financial markets, I think that the luxury consumer or the consumer that's buying luxury goods will be really the first to show the recovery. One, they tend to have more income, so they will tend to, when they feel better, spend it. And then I think you'll be in a better situation generally for overall retail spending, and jewelry in particular.
Now let's talk a little about mood across the consumer spectrum. There's some talk that the media headlines are driving some doom and gloom. In your experience, is this really true, or are there genuine issues out there that have really dragged down the consumer mood, and will this change in the next couple of quarters?
Well, how does the mood of the media affect the mood of the consumer is not a new question. There was a study about 10, 15 years ago from the University of Minnesota that found a very high correlation. So it's sort of the reinforcing of that negativity. And keep in mind that consumer spending and consumer sentiment can move to their own drummer, really. And you'll see often consumer spending pick up before consumer sentiment at turning points. So it's not necessarily one driving the other, but certainly the media could affect the sentiment. The other thing that affects sentiment, the study that I did some years ago, is presidential popularity. If the public views the president as an effective leader on the economy, that tends to be reflected also in better optimism. Whether it means better spending is a whole different story. Often the lead time, if there is even during normal times, is very short between consumer spending and consumer sentiment. But obviously, if you're looking for solid improvement in consumer spending, generally you'll see both high confidence and high spending, so that one does sort of support the other. But in terms of turning points, the timing may be different.
Now let's shift a little bit to the supply side. So in the wholesale trade, the supplying the retail brick and mortar stores, what might be the advice today in preparing for the next year out or so? Is this time to build inventory, reduce inventory? What exactly should these people be preparing for?
Well, it really depends, I think, on your outlook for the economy. And I am of the view that the U.S. economy is in a transition year in 2009. We do believe that the trough of the business cycle will be reached by early summer. And I think we're still on that path even here in April. So we're looking for a turn, and that turn may not be dramatic, but it will be an improvement from where we've been over the last year and a half. In that kind of mindset, then you would want to look ahead to what type of growth will play out over the next year or two, and also where that growth will be. Again, my view is that the luxury spending will, in fact, be one of the leading components of the overall consumer spending once it starts to turn around. Now, that may not be right at mid-year when we're looking for the trough, but I think as the year progresses, it will likely get better. So if you're looking for kind of a perspective on planning, I would plan on a recovery mindset, and one that is led by luxury spending. Now, that's not necessarily the story that will be seen until maybe late this year and certainly into 2010, but I think that's how you ought to be planning and thinking.
In precious metals news, investors have been reacting with optimism to the G20's efforts to boost liquidity again. In particular, one significant proposal approved by the world leaders was the sale of 403 tons of reserve gold by the IMF in order to assist the world's poorest countries hardest hit by recession. If prices continue to weaken, Indian demand for gold could easily rebound. Their imports have been near zero the past 2 months. Analysts still remain bullish on gold and predict long-term prices to be above $1,000 an ounce. For all the latest news, please visit diamonds.net.